Good morning to all traders and welcome to another Market Insights video provided to you by Orbex. We have interesting developments in the commodities and also the oil, of course, and gold markets. Finally, we start seeing some correction on gold after this amazing 6-year upside break, and oil at the same time also moves higher as the tensions between US and Iran seem to be expanding after following Monday's tensions when Mr. Trump imposed tariffs, sanctions actually to Iran for another time. Now, I want to have a look quickly on the calendar because we're expecting some good news coming out from the UK, the inflation report hearings, see if this is going to change the bearish pound for the moment. Then we've got from the US crude oil goods are going to move the US dollar, and consequently or sequentially we're going to see some moves on the gold as well. And of course, what we're going to explore and analyze today, oil. We are expecting the EIA crude oil stocks report later in the session. So I want to start with gold for our chart, as always. So gold, as we see here, it seems that it has reached a high level of 1430, above 1430, to complete wave 5 of this last impulse to the upside. Okay, so wave 5 here of this major sort of break was the one that initiated this 6-year breakout to the upside, and probably now we are looking for a correction. There is chances that we see a retest down here and prices move up, because at the long term this is looking very bullish, or prices could even actually break below that level, go back in within, closer to this last descending trend line that formed this ABCDE triangle. Okay, so there's these two chances. Now if I go down on the 1-hour chart, we see how this is likely to pan out also by drawing the extension of this last wave. We are seeing also that prices have reached the second extension around 1441, just actually a little bit shy of that, but we're still looking to correct down for an ABC pattern, and probably with wave A retesting this ascending channel. Both RSI and MACD give us good bearish signals, and that is, I believe, the case. Of course, don't forget that despite we have these tensions around Iran, and gold is going higher because of the risk of a war increases, we still expect the US and China talks to take place around the G20 meeting. And of course, if we have good developments there, gold will be most likely pushed to the downside a little bit, and that will help for the correction that we have identified. Now on the oil, I want to start with the 4-hour. We're looking at ending wave 5 here, and now we are looking for an ABC correction, okay? But the thing is that this has turned to be a bit more impulsive than we have originally thought. So although I'm still expecting prices to move up now, higher a little bit to end the wave 5, I'm not expecting the break of 60. Now, if that breaks, it would invalidate that as a correction, despite these C waves seems to be a bit impulsive. And we're probably looking at bulls to increase their bets on the upside. We're even looking at prices going back to 66, 67 level. But regardless, actually, we still expect a correction from around 60, and prices should be able to go back to around 56, 55, with invalidation again, the 53, 52. RSI and MACD both support this bearish move, but we haven't seen any significant signals as of yet to that trigger the bearish correction. And down on the 1 hour quickly. So we've seen an impulse within an impulse within wave 3. This break above that level validates that this is wave 4, and now we're looking for an extension to end this around the 60 level. Now, assuming that we have a false break to 74, because this is the second extension, duplication of that wave, of course, then, and drawing a Fibonacci retracement, we should be looking the correction to go anywhere between 56 and 54. Okay, with invalidation, again, the 53, 52. RSI and MACD also, the 1 hour, show us some bearish signals, but I wouldn't be surprised if we see a move to the upside that would actually give us a more complete bearish divergence signal. And from there, of course, is where bears are likely to step in. That depends, of course, also on the EIR report today. We could see prices moving all the way up before the event, or just consolidating. At the end of the day, we would expect to see this sort of breakout, the trend line, and prices should start moving lower after that. So I want to thank you for watching for another day. If you like the video, of course, hit the like button. And as always, I would like to remind you to keep an eye on our blog, is where we cover the latest news, publish trading ideas, and provide all the necessary tools trader needs.